Welcome,
Oh,
everyone. Thank you so much for joining us today. This is Jennifer with Ideal Credit Union, and I am joining with Victor Bradford of Engel Völkers, and we're sharing with you our Buying Your First Home webinar. All right, so a little bit about myself. I've been with the company for almost 4 years now. I really believe that your home is your safe place and the place that you find peace. And I love helping our members be able to find their home and be a part of their home buying journey. Right here you have my email and my phone number. You'll see it again towards the end, but if you have any questions, please feel free to reach out. I'd love to help you with whatever questions you may have. Okay, so jumping right into it, with the getting pre-approved, two of the things I'd like to highlight is our 3 key items and kind of the general process. So with the general process, you want to sit down and meet with the mortgage loan officer and kind of say, what's your timeline? What are you looking to do? If there's any specific details or unique things about a property you may be looking for, that's a great time to talk about it as well. We're going to review your options too. Depending on your timeline, will tell us whether we should move forward with a pre-qualification or a pre-approval. I know sometimes you hear those terms interchangeably out and about, but here with a financial institution, they do mean two different things. So again, that's something we can help you establish and what's right for you and the timeline you're at right now. And then we go ahead and we fill out the application, we collect documents, we run through very minimal initial underwriting, and then we can go ahead and issue a pre-approval letter or a pre-qualification letter. And at that point, that's when you would kind of review your options or start moving forward, connecting with a realtor like Victor, and then going and looking at homes. The 3 key items that we have for the pre-approval are going to be credit, income, and assets. Those three are all very important, but they kind of work together like a well-oiled machine for when we get you pre-qualified or pre-approved. And then we'll go a little bit more into those things through the other slides as well. So getting pre-approved, one of the things I'd like to talk about today are common mortgage misconceptions. First one being you start the process by looking for a home. Please do not start there. It's fun to go and look at all the options available, but the first step really should be speaking with a mortgage loan officer and talking about what we're needing to find for you, what is your timeline needs, your purchase power. It's really the best place to start. That way, once you have everything taken care of that way, you can just go from there. Second is you must put 20% down. That is not necessarily true. It really depends on which mortgage loan option you move forward with, what you're most comfortable with, and what you're also able to put down. Number 3, down payment is the only upfront cost. It is one component. There are several. If you're going to have escrow with your mortgage, you need to consider the prepaids that'll be paid at closing. There are closing costs like your appraisal, your flood search, government and title fees, and then down payment as well. So we like to call those total funds to close, even though down payment is the term you hear about most. The other is a 30-year fixed mortgage is the best option. Again, not necessarily true, but that's why we want to sit down, take a look at what your goals are, what we're trying to achieve, and how we best make that happen for you, because there's options as low as a 10-year fixed, or you could consider an ARM, an adjustable rate mortgage. So sitting down, laying everything out, and we can also kind of put things side by side as a comparison to see what's going to work best for you. The next part is only consider a lender with the lowest rate. Why that may be appealing on one end, it's not always the best. Sometimes you'll get a lender saying, hey, we're going to offer you 4.5%. But what you might not see on the back end is maybe they're charging you points to buy down to that lower rate, and maybe that conversation is not happening. So you want to kind of explore all the things, not just the rate, but what are their fees going to look like? What do they offer you as far as the lender on your loan? Are they going to service your loan for you as well? There are a bunch of different important topics to consider along with the rate. Common mortgage misconceptions part 2, you need to be debt free. That's not true. We don't so much pay attention to the full balance as more of the monthly payments, because one of the things we're looking at to get you qualified is your monthly debt to income ratio. So that monthly payment is a much bigger focus for us than the overall balance. The other one is if you have student loans, you can't get a mortgage. Again, that's not the case. Student loans are not a one size fits all. Someone may have much smaller compared to another member. And again, we just sit down and kind of work through the numbers, see how that compares to your current income, if you have any other debts and liabilities, and just put those numbers together. The next would be you must have perfect credit or you can't have low credit. While our investor for conventional and FHA do require a minimum of 620, that's part of our conversation we have. If you have lower than that 620 and we're not able to move forward, we can sit and have a conversation about the things that you can do to bring your credit score up, and kind of maybe what is the timeline that we might be able to look at going forward. So don't feel discouraged if that's the case, or even if you're not sure, that's okay. That's one of the things that we want to talk about and review for you. Sometimes that's also why the pre-qualification is a better start. It'll paint that picture for us and let us know how we need to move forward. The next would be pre-approval comes with a guarantee. Unfortunately, there are no guarantees in the mortgage world. So the pre-approval says, yes, based on this information we have right now and what we're looking to do, you are pre-approved. But through the process from pre-approval to closing on a loan, your file will go back through underwriting multiple times as information shifts and changes. For example, once an appraisal comes back, if we're changing the amount of the purchase price due to the appraisal coming back, or once we get your homeowner's insurance information and those numbers change. So there's not a guarantee, but there are several different checkpoints through the process. And with each kind of checkpoint, if you will, there's an approval portion of that. The last for the misconceptions is once your offer is accepted, the deal is done. Kind of like what we just discussed, there are different processes. Once you get your pre-approval letter and you start shopping, then once you have your purchase agreement, we're going to say, okay, we may need X, Y, Z as we move forward and work towards closing. So there, again, just kind of stepstones and different checkpoints from point A to closing. Common mortgage questions. What does your realtor do? Your realtor is going to be like your best friend during this. We all kind of work together like a well-oiled machine, and we're all going to keep in touch with each other through the process. But they're going to be super helpful in showing you the homes that are available. Is this an area where you might be getting seller credits? Is this an area where, if schools are really important to you or commute time to certain areas are really important to you, they are going to know all of that and be able to give you that information. They're also someone who's going to help walk you through the process and really look out for you in the purchase of a home, okay? What does your title company do? Your title company does a couple different things. They're in charge of pulling the title report on that property. And there's a couple different titles, but ultimately they look at the prior title information, make sure everything's clear there, help get everything recorded correctly with the city and the county. Another thing that they do is when you go to closing, they're the people who make sure all the right amounts of money go to the right places. The right down payment goes to the sellers, the rest of those funds going to the lenders. So they wear a couple different hats, super important. And they're a great point to reach out to if you have questions about things as well. Next question, why do I need an appraisal? My best example of this is, let's say you're buying a home for $350,000. Let's say the appraisal comes back and it's really only worth $325,000. Most people don't want to pay $350,000 if the home is worth $325,000. Another reason that's also important is because, your homeowner's insurance is going to insure your home for what your home is worth, right? We as the lender also need to know, because we can only lend up to the lower of two, whether it's the purchase price or the appraised value. So again, if your purchase price is $350 and it comes back at $325, we can only lend at that $325. If that happens, we have options to try and mediate that situation. But again, it's super important. You want to know the value of what you're buying. Next question is, what is my budget range? This is really important for us to know because as a loan officer, a lot of times what we get asked is, this is the amount of the home I'm looking for, but what's my maximum amount? And that's a great question. However, sometimes that maximum amount may be way over what your comfort level is for your monthly payment. And we don't want to put you in a situation where we're absolutely maxing you out from the point of closing on your home. So knowing what your budget range is and what you're comfortable with will help us allow that conversation to flow a bit better and saying, well, your maximum might be $400,000, but you've communicated to me that your maximum monthly payment, your comfort level is at $2,200. So then that gives us some other options and how we can work about potentially getting you approved for higher if that's what you're looking for, but stay closest to your monthly budget. Okay. Mortgage questions, part 2. What is earnest money? How much is it? And when do I pay it? So generally speaking, earnest money is due 2 days from when the purchase contract is accepted. It might be slightly different if you're getting an accepted offer on the evening of Friday, but generally speaking, it's 2 days. How much is it? It's usually about 1% of the purchase price, but that can also change too. That's another thing your realtor will help you do is communicate what is the best strategy for how much you should offer for earnest money. And what is earnest money? Well, if you've ever rented an apartment, you know you pay up front first month's rent and a deposit. So think of it as that deposit. And you're letting the seller know, hey, I am committed to buying this home. I really want this home. Here's basically a deposit on this home that I'm buying. Once you get to close, that earnest money is then deducted from how much more you need to bring to closing. But that's the best way I can explain that for you. Next question, what is escrow and do I need to escrow? So escrow is usually your property taxes and your homeowner's insurance wrapped into your monthly mortgage payment. Do I need to escrow? Kind of depends on the loan option you move forward with and how much your down payment is. So for example, in a conventional loan, if you put less than 20% down, you're going to be required to escrow. If you put 20% down, it becomes optional. So there are different variations with different loan options where that kind of might change for you. But again, another reason to sit down and have a conversation with your mortgage loan officer so we can make sure we're answering all your questions and you're understanding all those lingos and the if then this, then that kind of ins and outs. What is title insurance and why do I need it? Title insurance is super important. When you're comparing the cost of title insurance to what you're buying, please, I recommend every day of the week getting that. And the reason why I say that are there's 2 different kinds of title reports. There's Torrens and Abstract. And basically, without getting too into the weeds, one is with the most recent purchase of that property. And the other is kind of the entire history of that property and that plat. And so the reason that's super important is, let's say I buy a home today. Let's say when they do my title search, they're doing it just the most recent sale. Well, if 5-10 years down the line, I decide I want to sell it, and then they go back and they look through the history, if there's a problem 10-15 years prior to when I bought the home, and we didn't know it because we only did the most recent when I bought the home, now there's a problem. So that title insurance helps protect you in the event of an error coming up like that, or them finding an issue that dates a while back. So again, super important. I would always recommend doing that. Last mortgage question, what are and how much are closing costs? I do say that with quotations because it goes back to, we like to call them total funds to close, because closing costs is just one portion of the funds you bring to close. Again, there's prepaids if you're doing escrow, there's your down payment, there's government and title fees. So it's kind of all encompassing, right? And usually when we have someone who comes in and they say, well, I have this much money set aside, we're going to say, okay, well, is it this much set aside? Is it for everything, or is it just for your down payment? because that's important for us to know. We don't want to say, surprise, you need to come to close with 15,000 if you've only set aside 10,000, right? We want to make sure we're working those into the numbers for you. All right, now I'm going to hand it over to Victor. Victor and I have worked together on several deals. He is wonderful. If you work with him, you will be in the best of hands. He's going to shoot you straight. I would highly recommend him every day of the week. And Victor does work with Engel Völkers. Victor, I'll go ahead and turn it over to you.
Thank you so much. That was so informative.
Thank you.
Yeah. So, like Jenny said, my name is Victor Bradford. I'm with Engel Völkers. I'm a real estate advisor here in the Twin Cities. And I'm a little bit about me. I have a little over 6 years in the industry, and I'm originally from South Florida, from Miami. And yeah, I like the weather here. So the agenda today, we already had our little welcome. We have our seminar goals. We're going to talk about our defining key terms, the 10 steps of the home buying process, and then we'll have some time at the end to do some Q&A. So just write your questions down while we're talking, and at the end we can talk about them then. Seminar goals. Okay. So as a result of today's seminar, I would love for you to walk away just feeling so much better, because I understand that just the process of buying a home and just thinking about buying a home, I mean, it can be very overwhelming. So hopefully with this seminar, you can just walk away just feeling confident, alleviate some of the fear and anxiety that comes with all the steps, because it is a lot. But the whole goal is to just make it as smooth as butter. Here's some of the key terms that you should familiarize yourself with. There's buyer's agent, which is the real estate advisor that would be representing the buyer. There's listing agent, would be the advisor that is selling the property on behalf of the seller. There's the lender, which is the bank, basically, that's funding the home. Title is the third party that will, and we're going to be talking about these in detail. So title is going to be more about transferring from one owner to the other and getting all the funds situated. Buyer's agreement contract is a legal document between the buyer and the brokerage that just outlines commitments to each other and outlines the compensations. There's agency, which is a disclosure that is basically what this is just defining what buyer agent is, listing agent is, dual agency, facilitator, and just helps you understand what those roles are. And purchase agreement is the contract that will be submitted, if you're a buyer, to the seller, and it's a contract between the buyer and the seller to purchase a home, and it's just going to have details of the price of the home that you want to purchase it at, consequences if you are not doing your part, inspections, and just all different types of terms will be in this purchase agreement. The home buying process. So this is going to be a 10-step process, and we will be able to email you this so you can have this and help you identify where you're at in the stage. And we're going to go step by step. So you can choose your advisor who you're going to be working with, get your pre-approval with Jennifer or wherever, and then find your home and whatnot. So choosing your advisor, it's really important to pick the right advisor that will answer all your questions and encourage you to make a wise decision. Just like Jennifer mentioned, like, although you qualify for a $400,000 home, it might not be, what you want, and you don't want someone to be pushing you in that direction. We want to get what is going to make sense for you financially, that's going to give you peace. So You don't want someone that's going to be pushy and that will be able to advise you to make the best choice for you and your family. Why do people buy homes? Well, there's a variety of reasons why you are needing to buy a home. So maybe your family's growing, you have 3 kids and you're pregnant, you're having twins, you need a new home. There's life changes, there's relocation, you get a new job. Unfortunately, there's divorces, there's death in the family, those things. Desire to invest. You want to invest in a multifamily home. You want to have a rental, Airbnb, want to diversify your portfolio. So there's many reasons why people buy homes. It's great for wealth building. And it's not something that you should be afraid of. I think it's one of the best things that you could ever do in your life. Getting pre-approved. Well, we kind of talked about that in depth, but unless you're paying cash, you will need a mortgage. And in order to know how much you can afford or what you qualify for, you need to get a pre-approval, because you can make $1 million a week and you can spend $900,000 of that a week and you will not qualify for hardly anything. So it's very important to know where you are in your buying power. So we don't waste your time looking at something that's unrealistic, because you don't want to just waste time on your weekends looking at homes that are not going to be in your price range, or that it just doesn't make sense. So finding your home. Now we get to the fun part. By now, you've already gotten pre-approval, and you kind of have an idea of what you want. If you have 3 kids, you might want 4 bedrooms. If you want to have a rambler or a 2-story home, you kind of have a better idea of what you're looking for. Other things to consider would be, like I mentioned, a single family home, a multifamily home, condos, or townhouse. And each one of those are going to be a different lifestyle. And you're just going to have to see where you're at in life. Maybe you're a bachelor and you want to live in a city. You know, a condo would be a perfect fit for you. You have that community. You can walk to the restaurants, to the bars, and but if you have 3 kids and you want the great school district, then a single family, you know, is going to be better. You know, so it just depends on where you're at in life and where you're at in your lifestyle. Also, things to consider would be the condition of the home. There's new constructions, there's used homes, there are older homes like the 1900 homes with the character. There's homes that need renovation. So those are really important to consider. I myself love a house with a renovation. Why? Because you're going in and you can build equity in it. Normally, you would buy a home, and throughout time, your home will gain appreciation, and that's normal, right? But when you buy a home that needs some renovations, you can put sweat equity into it, and you can build equity into it. So you can buy a home, and you can put $20,000 into it, and now it's worth $50,000 more. So it varies. Obviously, if you have 5 kids and you're not very handy, that's not going to work for you. But so resale value is another thing. Finding a home, depending on the location, is very important too. If you buy a home, like for example, close to a highway, you would probably get a good deal, because not everybody wants to live next to the highway. Maybe you don't care, but some people care about the noise factor. If you have kids, playing outside, it's a busy road. There's cars coming in and out of the freeway. It could hurt you on the end point where when you're going to resell it, it's not going to be as desirable. So there are a lot of things to consider when you see the home. Is it next to the highway? Is it on a busy street? Is it close to a school? Those things are important. Also, obviously, number of bedrooms and bathrooms. I mean, that's a no-brainer. The neighborhood, obviously, if you want to live in a certain neighborhood where your family is, or that have great schools, or just different programs, you know, those things matter. Writing the purchase agreement. You found a house. Now what? So now it's time to make an offer. So by now you already have your pre-approval, and now you are ready to place an offer. We cannot place an offer without that pre-approval. It's pretty much mandatory to do this nowadays. Because especially if there's multiple offers, they want to see that you are committed. They want to see that you are prepared, that you are financially responsible. So it's very, very important to have that pre-approval letter at this point. The offer is going to include the price of what you want to pay for the home, the earnest deposit, which is typically 1% of the home purchase. So if it's $300,000, you're going to do a $3,000 earnest deposit, and it has to be deposited within 2 days. And that money does go towards your closing costs. Dates also should be listed on the purchase agreement. When is it going to close? Is it going to be a 30-day closing? Is it going to be a 45-day closing? Is it going to be a 2-week closing? So all these dates are very important, and there's also inspection dates, how long the inspection is going to be. Are you keeping the appliances? Do you want them to remove the appliances? Do you want the curtains for the new house? Or there's a lot of things that can go in this purchase agreement. And it's very important to talk to your real estate advisor about what you want and what you don't want. I personally had the sellers remove the built-in storage unit that they had in the garage because I didn't want them. And I didn't want to remove them myself because that's just extra work. So I had them take it out, and they didn't have an issue with that. Also, fees associated with the sale. Who's going to be responsible for taxes, assessments, or God forbid there's liens on the property? And the offer will also declare what the consequences would be if there's a breach in contract. So if we have a 5-day inspection period and it's day 5 and day 6 comes and nothing has been decided, there has to be verbiage of what happens on both ends if one is not holding their end of the bargain of the deal. Inspection. So your offer was accepted. Congratulations. Once your offer is accepted, it's now time to hire an inspection company to inspect the house. There are different types of inspections. There are general inspections, which they check the house from head to toe. They check the basement, they check the roof. If they have access to the attic, they'll check it out, they'll take pictures. They will compile a report. They also check the exterior. They also can get on the roof if they're able. They take tons of pictures. They test a lot of outlets, and it's very thorough. And you will get a report after detailing all the things that is wrong with the house. And whether you're buying a brand new construction or a 1800s house, it's going to have something. There's going to be something wrong. It's basically a report of what's wrong. But we're not worried about the little things. We're worried about the big things. There's radon inspection, which is going to inspect the gas levels of radon in the home. There's sewer line inspections, which checks the sewer line pipes that are connected from the home to the city or to the septic system. And there's other types of inspections that could be added on, which is well inspection, which they test the water. The mold inspection, they check the air quality of the home. And structural, so they'll have a structural engineer come out and they'll check the integrity of the home to make sure that it is structurally safe. But all these cost money, so they're not part of the general inspection. General inspection is one thing, and then you add on the radon, you add on the sewer line, you add on the well, mold, and structural. So the general one is the one that you typically get in an inspection. Inspection logistics. So each inspection is going to differ in cost. Like I said, they're all different things, and it's going to be depending on the size of the home. Obviously, a condo that's 900 square feet is not going to cost the same as a house in Edina that's 5,000 square feet. And they're going to have different requirements for, not requirements, but different things that they want for inspection, right? So if the offer, we will select how many days the inspection period will last. The shorter the inspection period, the stronger the offer is. So you can have an inspection period of 5 days, 3 days, or 0 days. Obviously 0 is the strongest offer. If we have 5 days, we have 5 calendar days to hire and complete the inspection during that timeline. Once those 5 days are up, you can no longer back out of the agreement. You can, but there are consequences. Just like how we talked about the consequences in the purchase agreement. You can back out, but you will most likely lose your earnest deposit, or you can negotiate to give up half of it or some of it or whatever, but it's not going to go in your favor. During those 5 days, you have the right to negotiate any significant repairs, roof, structural, mechanic, health risk. Those are the things that we're looking for in an inspection. We're not looking for the outlet that needs to be GFI or a leaky P-trap that can be fixed with $10. Like, we're not looking at those things. We're looking at the serious, expensive mechanical things, roof things. The roof is leaking. There's a bowing in the basement. There's mold behind the wall, like those kind of things. Or there's a high radon gas reading. We're not talking about anything else. So during those 5 days is when you have time to negotiate either the repairs, funds to do it yourself, or to get it repaired by a contractor, licensed contractor, or to just back out from the contract. Also, once the offer is accepted, you will need to deposit, like I mentioned earlier, the earnest money within 2 days of an accepted offer. So in the contract, it says that you need to deposit this in 2 days. So if you're on day 3 and you have not deposited, you are breaching contract, and the seller has the right to say, well, I'm going to cancel this contract because you did not deposit it within 2 days. And that could happen if they happen to get a backup offer that is better than your offer. So you want to make sure that everything that is on the contract, all the days are respected, and that it's not, time is of the essence, and that you don't procrastinate these things. And it's very important to have an advisor, be on you if you need that, and to remind you, and to be able to schedule and find the best inspector to be there the next day or whatever the case may be. But these things are important because it's your money on the line and your potential dream house. Executed purchase agreement. Your inspection is over. The 5 days are over. So now it's smooth sailing. Okay. Lenders will now start asking you for additional documents, and it's going to feel personal, but don't take it personal. They're going to be asking for all, maybe you need to pay off a credit card that's $200, and that's happened before. It's why is paying off $200 going to do anything? It's going to do something. I don't know what it is, but it's going to do something. So they're going to ask you for additional documents. They're going to ask you to do certain things, do the hokey pokey. I don't know, but just do it and get it done. And then next is time to order the appraisal. Appraisal. What is an appraisal? Well, the appraisal is a third party that determines the value of the home for the bank. If the appraisal comes back lower than the home is purchased at, so if we put an offer, so if the house is 300 and you put an offer for 350, that's going to be tough. But if you put an offer for 310 or 300, it's most likely going to be okay. So the appraisal comes back home in the is purchased at, we will have several options. So like if it comes back at 295 and you put an offer for 300,000, we have three options. We can ask the seller to lower the purchase price to 295, which in most cases will likely happen because they're not going to let a deal fall through for $5,000. Pay the difference out of pocket. You really love this house. This is like your dream house. And for you, $5,000, it's worth it. And sometimes, you can rearrange things, maybe put a little bit less money down, take the 5,000 out of there, whatever. I mean, there's ways to make it work. Another option is cancel the purchase agreement. That's kind of like the worst case scenario. This would be good if you pass the inspection period and you really have some buyer's remorse. This would be your one ticket out. And this is your one ticket. And you can also negotiate the difference of who pays what. So if it's $5,000, you could be like, hey, you pay $2,500, I'll pay $2,500, or whatever the case may be. You can go back and forth and negotiate that. You can ask mom and dad for an extra $2,000 or whatever, but it can happen, it can close, but these are pretty much your options. Title commitment. Title commitment is the result of a title search performed by a title company done in the course of issuing title insurance. Jennifer touched on title insurance, which I advise 1,000% of the time. Doesn't cost much and it will protect you. There are so many nightmare stories of people losing their home because they didn't want to spend an extra $500 or $600 on title insurance. Do not do that. Get title insurance. It's going to save you a big headache. And during this time when they're doing the title search, they're just going to be listing, who are the owners? Are there any kind of encumbrances on the property, on the lot? Are there any exclusions from coverage for the title insurance policy? And what requirements to convey a clear title? They're going to look at, are there any liens? Did any contractor put a lien on your house because you did a renovation and didn't pay the contractor? Now there's a lien on the house. Like, are there tax liens? So it's very important to have a great title company to make sure they do their job well and be able to find these things for you. Final docs to lender. Congrats, you're almost there. Final docs are closing disclosure, also known as an ALTA. So a closing disclosure is an itemized document that details all the fees associated with purchasing your new home. And you're going to get this probably 3 days before closing. So 3 to the day before, you'll get this document and it's going to just itemize everything. It's going to say lender fees, title fees, closing fees. I mean, even like fees to send the documents by courier to the courthouse, tax fee, like the taxes, the property tax, like it's going to have everything. And you're going to be able to look at it and make sure that everything is proper. Because you'll talk to the title company and they're going to say, well, we charge, $475 for title fees. And then you look there, it says $525. I'm like, hey, you told me it's $475. So that's when you can adjust, like if there was a mistake. So it's going to have just what I said, lender fees, title fees, down payment, and it's going to say at the end, the total funds to bring at closing. And this is what you're going to bring to closing. If you don't bring these funds, you're not getting a house. Closing time. So now it's getting closer to the closing date. You will get a call from the closing agent to set up an appointment to sign all the paperwork and transfer the property to your name. Final walkthrough. I personally love to do the final walkthrough like an hour before going to sign the paperwork. I think it's very important. You don't do it a day before, 5 days before, because a lot can happen between that time. So basically the final walkthrough is just going back to the property and making sure that everything is as it was and how it should be based on what you put on the purchase agreement. So if you put in the purchase agreement, hey, I want you to remove the shelving like I did in the garage. I get to the final walkthrough and the shelving is still freaking there. I'm not closing. I want those shelves out of there. So it's basically making sure that everything is working. Is there water in the basement? Are there random giant holes in the wall? You know, those things. Is the roof leaking? You know, I mean, like, you want to make sure that the house is in good standing order as you saw it, because once you sign those paperwork, that's your problem. So want to make sure that we do a final walkthrough an hour before closing to make sure everything is good. And after that, we go to the closing table, we sign, and then you are a new homeowner now. Now it's time to celebrate. Yay! Q&A. Thank you for watching and for participating. If you guys have any questions about the process, now is the time.
I can't see any questions on my side. How about you, Victor?
Nope. And that
Okay.
means that we did a fantastical job.
Yay! All right, everyone. Well, thank you again so much for joining us. Again, you do have Victor and myself, our emails and our phone numbers. So if you have any questions, please don't hesitate to reach out. We'd love to help you, and I hope you all have a wonderful rest of your day.